A,
Uh,
a very warm good evening to everyone. I, CA Vinita Gopna, welcome you all to this insightful and important session on the topic How to Bet Big on Indian Growth Story, an introduction to Megatrend Investing, organized by the Committee on Financial Markets and Investors Protection ICAI. The Committee on Financial Markets and Investor Protection works in the area of promoting investors' protection by nurturing capacity and competency, development of members and stakeholders in the financial markets. The committee has been actively working in the area of financial literacy for the development of economy through its various learning initiatives of workshops and training programs. Currently, the committee is functioning under the chairmanship of CNF Singh, Charanjot Singh Nanda sir and Vice Chairman Sri Kothai Srinivas sir. And now, I would welcome to our eminent speaker for today's session, CN Navjot Singh sir and CN Nimish Maheshwari sir. Starting with CN Navjot Singh sir, he is a chartered accountant currently serving as committee member in Chandigarh branch as the chairman of Investor Protection Committee. He having an experience of more than 10 years investing in stock markets since 2015, he has been using elite waves to invest and trade in stock markets worldwide. Over to you, sir.
well, thank you, Vinita, for the kind introduction. I thank each one of you for joining us today and sparing your precious time. To start with, I will share my screen. Visible?
Yes, sir.
Vinita, is it visible?
Yes, sir. Yes, sir.
Okay. Our today's topic is how to bet big on India growth story, mega trend investing. So when we use this nomenclature, mega trend is investing, then definitely there are some key factors for a country which we need to look upon. Like those are GDP numbers, economic developments taking place at international level and domestic level, industrial policies, vision of the leaders of the country, budget performance of that particular country, and the law and order situation. And then some more factors are there. So once we take the GDP numbers as an example, recently the Indian GDP numbers were great, which were near to 7.8%. If you have seen the recent Economic Times news, yesterday, 2 days back only, the GDP numbers were released, and our markets really responded well. And if you see yesterday's market, it closed 200 points up and responded well to this news. So definitely we can say that our country is on track and it is going as per the planned numbers. If I compare this GDP number globally, then I believe we rank on the top 5 in this growth rate. Likewise, the other economic developments, if you see in India, you can recently we had a Chandrayaan 3 landing on the moon. And then there is a very big major event happening in India, that is G20 meeting this time happening. So these are very big developments which are happening around our country, bringing India on a global map. So definitely these factors help to catch more and more FDI for the country. And then there are industrial policies which can help you decide the sector which you want to go for a mega trend investing. So industrial policies, if you're reading the Economic Times or other newspaper or well versed with the regular news which has been floating on the financial markets, definitely you get to know about various industrial policies which are going in the country. One example I'll give you. Recently, if you heard about that, India is like making some changes in the import policy for the laptops, which is effective from October. Majorly, this change came because there was a PLI scheme which our country was running to promote more and more manufacturing of the laptops in India. But there was lack of response to this policy, due to which that our country had to resort to this measure So they had to refrain from importing the laptops. So they have placed certain benchmark on that number. So what change it brought recently was the country received nearly 58 applications from the global manufacturers. So this was a gamble basically, and it responded very well. So you can just imagine how the electronic sector will perform in coming years. So industrial policies are very important to keep in mind and to choose the sector where you are investing. Then you broaden. Once you choose your sector, then you choose your stock selections or any instrument in which you want to invest. So your vision should be very much clear. You need to be, well aware about the economic situation going on within the country and the industrial policies. Keep on reading the financial news which is being quoted. There are various portals down the line which brings you these news. One, if I give you an example, like Economic Times is the best. If you make a habit of reading that even online, that will definitely help you a lot. Then there comes a vision of our leaders. 2 years back, our honorable Prime Minister shared his vision of taking our economy to $5 trillion. So from down the line $2 trillion to 2.5 trillion now, doubling our economy to $5 trillion. So that means that various uh, industries which are like contributing to this economy are tend to grow rapidly because of this vision only our countries make the policy accordingly, and definitely that helps in the growth of those sectors. Then there is a budget performance of the country. Our country is regularly maintaining the uh, deficit performance nowadays. Our deficit is under control, and our monthly income numbers for the country is going good. If you regularly read the news on the GST collection and the income tax collection, that basically hints on what is the income level of the India and how the economic factors are contributing to that income. So I see the numbers are going good currently. Inflation numbers are being controlled by RBI regularly by maintaining the interest rates. So that is very important. And then the law and order situation, which is being maintained well right now. So coming on to the techniques of investing, which you can use, keeping in our topic of the day, that is mega trend investing. Well, there are different techniques you can use. I basically prefer technical investing, but there are two other techniques which I always recommend. If you are not good in technical investing, you can go for that, because our curriculum of chartered accountancy is based that those two other methods, uh, you can easily grasp them because they are basically a number crunching game. If you are good at that, if you are good in comparing data, then definitely you can land up with uh, good sector with good stock picking, or any other area of financial sector where you want to invest. So mutual funds. Coming on to mutual funds, the key points which I see in is like identifying the growing sector. So the growing sector has to be decided. Since once you are aware of the economic trends which are prevailing in the country, then I believe you will choose the sectors wisely. If I give few example, like EV industry nowadays is growing rapidly. Various manufacturers are slightly and slowly shifting to this sector. One of the major most example I can give you is Tata Motors, which has capitalized the growth in EV segment by taking first mover advantage into this sector. So currently they are holding EV market of more than 25%, which is in passenger vehicle. So these are the news, or these factors you need to aware yourself uh, while deciding the mutual fund you want to invest in. Then there comes selection of mutual fund investing in growing sectors. Apart from the EV sector, I believe there is a healthcare sector which is rapidly growing. Definitely, diseases will never come to an end, and the healthcare sector will grow rapidly in near future also, keeping in the population of our country. So the demand will be there in that sector. So likewise, there can be many more sectors which you can correlate with the consumption, the demand, and the prevailing economic factors. You can keep these things in mind and then decide on the sector which you want to invest in. Compare the history of the mutual fund in last 10 years. Once you decide the sector you want to invest in, then you choose a mutual fund. When you choose a mutual fund, then you decide how the mutual fund has been performing in last 10 years. If the rate is consistently good, then you can choose onto that mutual fund for your SIP. Plan your SIP accordingly, keeping your financial plans. So basically, you need to plan your SIP, keeping your appetite, what you can invest on monthly basis. Monthly would be best because you average out your risk on monthly basis, which is, I believe, the best practice. And keeping your financial plans, what number you want to achieve at the end of a particular period, accordingly you can plan your SIP or investment through the advisors. There are various companies which are operating in this segment, and they are operating for high net individuals, which range from currently they are also taking portfolios down the line to 10 lakhs also. So they will take the money as in portfolio investors. They will invest on mutual funds for you, and in my idea, they are usually giving a return of nearly easily from 15 to 20%. So you can plan out your advisors accordingly in the market. You can search on them. We are not going deep into that. Then there comes another method which I feel is good for investing. That is fundamental investing. For a fundamental, what is a fundamental? Basically, a fundamental is a criteria where you see for particular stock, you see that how the management of the company is performing, what is the layoff criteria, what are their regular numbers, either they are monthly, either they are quarterly, either they are annual numbers. You need to see those numbers are growing at a consistent pace. There is no decline in that. What is the future prospect of that company or that sector? Like I gave a recent example of EV industry, where I gave in one example of a company that is Tata Motors, basically. So, if I take an example of Tata Motors, then how would I analyze that? I would analyze their numbers for the last 10 years, the growth in stock numbers for the last 10 years, and future demand in that sector, how the management of the company is performing. And likewise, for other stocks, you can do the same thing. Economic factors which are prevailing in that country, whether the economic policies for that sectors, if the company our country is supporting that industry through the industrial policies or not. You need to figure out that. For an example, if I say that I recently quoted that our country has made certain changes in the import norms for the laptops. So with that line, within next week, I saw a news that Geo would be investing in a plant which would be manufacturing laptop in India. So a decision has been taken based on the economic policy which has prevailed in the favor of our domestic sector. So these are the things which the regular businessman and the regular companies are looking into. So the you can figure out these things while you're stock picking also. Then there is a good tool for the number crunching. If once you analyze your sector and you want to see how that company is performing in the numbers, I feel there is one website which I've been practically using that. I'll show it to you because I don't want this seminar to be just a PPT based. I want this seminar to be practical based with a live experience, how you can do things online, uh, whatever you have learned today. So screener.com is a website which I've been using for many years to crunch the numbers to see the growth story in a particular stock. So I'll show you this online, how it goes. So this is our website. Basically, I've opened one stock for you, that is SDFC Bank Limited. Supposingly, uh, if I've decided fundamentally that I want to invest into financial sector, then I picked on the few stocks. On the top of that thing, I decided that SDFC Bank is a stock for which management has been performing very well. There has been no major issues or headlines in this company where there is any breach or anything happened within the company. So any sort of that news, hanky panky thing which has happened or been reported to SEBI. So we haven't heard that in last 10 years. So if I look at the economic trends with a vision of $5 trillion, I believe uh, there will be a lot of credit injection would be there in the economy. So definitely SDFC Bank, which is now the fourth largest bank after the merger of SDFC Limited and the SDFC Bank Limited, SDFC Bank and the SDFC Limited, which was their housing arm. So now the bank has a very great opportunity. If you analyze, they have a great cross selling opportunity now. So whatever the clients for the SDFC Bank were there, now they can offer the same product which they were offering in SDFC Limited to the SDFC Bank Limited clients also. So definitely this will widen their portfolio, and you will see the results down the line in Megatrend. What do you say, like down the line, 5 to 10 years? So coming on to the numbers now, SDFC Bank Limited. Well, these are the pairs which you can also look at once you have selected the stock. From these peers, I've selected SDFC Bank. So now I would like to go with the results basically. So results are like, if you see the balance sheet, I'll go for yearly. So if you see 2012, so here we were, and we are now watching 2023, where we are
Sorry
today.
to interrupt you, sir.
Yes.
There are a few questions from the members. Shall I ask you right now or at the end of the session?
Yeah, once we complete the slide, then we can have a
Okay, okay,
short
sir.
question. Okay. So if you see this, like in March 2012, the balance sheet which was reported was near to, like the revenue was 28,000 crores. So down the line, you can see we the bank has grown near to 7 to 8 times in the revenue. And likewise, if you see the profits have been consistently being maintained. So there has been no year where the profit has been declined from the past year. So which is a very good sign for selection of a stock. Then there comes a EPS, that is earning per share, which we have read in MAFA also. You can see consistently this has been increasing over the years, which is again a good sign. It is a dividend paying stock. Regularly, they are maintaining a ratio of 20. Down the line, COVID, it was reduced down. So we know that was due to the economic factor which was prevailing in country. But again, they picked up when amid COVID. Okay. Uh, then, if you see, there's a fun fact over here. Like, if you see the stock price, the compound annual growth rate of a stock has been 19%. The fun fact over here is that the bank has been attracting a deposit at a rate of 7%, which was earlier 6%. So, you are investing in your FDs in a same bank for and their stock has been giving consistently to a near to 20% return. So uh, frankly speaking, I have been getting call from SDFC guys for various mutual fund schemes. When my reply to all to them has always been that I have been investing in your stock. So and from that moment they never call me back because they know that the bank has a very strong growth story. Their stock itself is performing near to 20% Kargar growth rate. So definitely, I would suggest if supposingly you have a fund of like 10 lakh base, you can divide it into 50-50 part. 50 can be on a non-risk based asset, and 50 can be some out to be a risk, slightly a risk based asset. Here, SDFC Bank is it's quite big to fail. I believe today SDFC Bank holds near to 15% of the weight of our whole Nifty index, which is a representation of our GDP numbers. So Nifty is representation of GDP numbers. Then coming down to the line, you can see fixed assets. Fixed assets are growing consistently, and this fixed asset growth has been commended by the growth in revenue. So you can see that the numbers which are being invested, so the return on fixed asset has been very good for the bank. Then there is a operating cycle. Although it should be positive, it was slightly negative, but the same was supported by the financing activity. So they have the resources uh, to make up for that loss in that operating activity. But 2023 has been great, and bank has came back strongly. So bank has been attracting a lot of deposits here. Uh, so that is a good sign, basically, for lending. You can see that FIs are very strong into investing into this bank. So basically, 74% is the ratio the FDI which a bank, a Indian private listed bank can attract. So FIs have been investing into this script very tremendously. So overall, I can say that this script has ticked mark all our check boxes, and I believe it is good for the mega trend. And I feel the number will double down. We'll see within like 5 to 10 years, the 1500 mark will reach to 3000 marks. So yes, Vinita, if there is any query, we can take.
Yes, sir. There is one question. So, what about HDFC Defense Fund? Can we go for invest as it already give approx 20% return?
Well, definitely the defense funds are less riskier one. Based on your appetite, you can decide on. You can also decide on the aggressive sectors also. If you have a fund base of 5 lakhs, try to divide it into some aggressive sectors where you have seen more returns also than 20%. Although 20% is a very good return. So based on the sector, the defense sector, on the then you need to also see on what scripts or what stocks that mutual fund or that sector has been investing into. So if you see that there is a growth story into that particular companies, then definitely you can select onto that mutual fund and accordingly allocate your funds based on your risk appetite. Okay.
There is another
Now coming
question.
up, yes.
My question is how to do quantitative and qualitative analysis for a company. Is there any checklist or book that I can refer for the same?
I have referred one book in my past years. That is The Intelligent Investor. It has been written by Benjamin Graham, and Warren Buffett has been following that book from a very long. It is having all those points which your queries relate to. You can read on to that book. About some time, definitely you will reap benefit out of that.
Now you can continue, sir.
Okay. So coming on to the last point, technical investing. Technical investing is done through two ways, basically. It is using textbook chart patterns, which are there. These patterns are basically universal accepted patterns. It is not that I'm in India, I have seen particular in one stock, and then I'm just telling you that pattern. It is not like that. It is a universal acceptance. If you read on these patterns, you will see that the same patterns are followed in US markets or either any of the global markets, you can see. Uh, Also, in any of the areas like commodities, you word it, commodities, cryptos, stocks, bonds, then currencies. These chart patterns are followed everywhere. So these are textbook patterns. I'll show you few patterns on the live chart. where you can recognize those patterns, and more you can also read on them going to Google. So just type on the Google that some good chart patterns, some good chart, then you'll get few universally accepted patterns which you can follow, which you can learn about them, and then you can follow. Few of them we'll be discussing today. Then there is another method which I personally use is Elliott wave investing using super grand cycle, which ranges from 5 to 10 years. So Elliott wave, Sir Elliott in 1940 invented one theory, keeping in mind that our stock markets runs like a sea wave. One You must have seen sea waves in an ocean or a sea. You see those high tides then going down. So he related that with our stock market. He said that there is always a level when investor enters, then slightly institution investors also comes in, then FIs come in, then there is a point where the greed is high, then that is the point usually the retail investor and then we see a fall in a market. So this then again from a particular fall you can see next high rise. If you remember that Nifty went to 7500 to 800 range, down the line from 1200 500, 12500, which was there in September 2019, and in 2020 March we hit the bottom 7800, and from there we are down the line to 18,000. So definitely a low tide came in the market, but it was responded by a very high tide in numbers, which has taken us today to 18,900. So Elliott wave, basically, as the name suggests, it is a wave cycle which have definite principle rules. It is not a gambling. This is purely investing, understanding the theory, understanding the key points of the theory. You can make a stock selection, and then you can apply this theory on that particular stock for the long term investing. So let us discuss this practically. Is my screen visible?
Yes, sir.
Okay. So I've taken an example of Tata Steel Limited, basically. So currently, the stock pattern which we were discussing, some of the textbook patterns. One of the textbook pattern today I'm telling you is that is a cup and the handle pattern. Cup and handle pattern, basically it's a reflection of your real life cup which you used to have a sip of tea or from. So that has been incorporated in our stock markets also. That is a fun fact how we recognize that pattern. So basically this is a very amazing cup shape pattern which is forming here. This is a cup, this is my handle of that cup, and you can see that I have got a very strong breakout when this pattern is break. I'll show you this pattern, and you can always log on to a website, Trading View. This is a free portal where you can see the charts for the scripts which you want to invest in. You can use various hourly charts. There is a time frame for the chart. You can log on to any time frame. If you're a very short-term investor, then you can go to a shorter time frame. Since we are discussing on a mega trend investing, we'll be referring 1 day to 1 week chart. For our understanding, I have resorted to 2 hours chart now, just to show you this pattern. Basically, look, when this pattern broke, volumes of the stock rise tremendously, almost doubled from its recent week highs. So why this phenomena came? So this was something the traders, which were short-term traders basically, they were looking into this trend, and when it came to realization, the volume came very high in a one day, and recently stock gave 4% return. So these are the textbook patterns which you can see. So basically this pattern was forming in 1 week chart. So the more the time frame on which a particular pattern is formed, the more the stronger pattern will be there, and the longer the journey of that stock will be there. So currently, I see this stock coming over to here. So this is basically this was my last high of the price. So in so what is followed in the technical charts is that whenever you see a resistance, how the resistance is shown in the charts is that uh, you join the tops, the recent tops. So whenever the script is coming from the down point, so it will face resistance in the near tops. So if you see here, this was my recent high, but my stock saw resistance, it came down, then it came back with a new force. So each resistance uh, makes the stock hinders, and you can see some correction from that resistance. So basically, in our case, since the last resistance has been broken, I see a new target which is coming over here. So how would you basically decide the target? The target is decided basically what would be the my height of the cup. So this pattern is on the long term charts, that is weekly chart. It has formed. What was my time frame for this pattern? Basically, if I see, it has happened in 203 days. So which is basically near to 6 months. So 6 months have took for this pattern to form. So my target, which comes is from here, is this is my price range tool, which I'll plot here. So my target would be final target would be this. Since this was the height of the cup, and from the point it has broken, from there I will project that height of the cup, and that would be my final target. So which comes near 145. But I see a resistance near 138, so I'll have a slight downtrend from there, and again the stock will pick up momentum from slight correction and ending up near this 145 range. So this is a textbook pattern, a cup shape pattern, which you can just text on the Google, and you can read more deeply into this pattern. So the next pattern which we will discuss today would be on the stock Trident. I've recently started a YouTube channel, and I've given this call 2 days back in my YouTube channel. So you can also join my YouTube channel with the name CA Navjot Singh. Uh, My handle is denoted by Navjot 1989. From there, you can recognize it. It has a video of Tata Steel. So, so this was the pattern basically. I'm showing you for understanding. Such patterns are also formed on a longer term trend. You can recognize them. So this is another textbook pattern. So what it is called is a flag pattern basically. This is a flag pattern. This is my flag. you can correlate it with the flag. And this is my pole. This is my pole of flag. Okay. So what is the next target coming from this is? So this is the height of my pole, that is 6 rupees. So when the breakout happened, so this was the time when I could have entered this script at 37, near to 37. If you see near to 37, the volume became very high. So this was a very good example that this pattern was breaking out, and you could see the target which is coming from here is that is equivalent to the height of the pole. So my height of pole ends over here. So the target coming from this top currently is 43.5. So this is my study basically. You can always do your study also, because these patterns are available in Google. This is something that I have learned from lot of reading on the stock markets. I came across these patterns. I recognize them. I keep on watching charts, and so I can easily recognize them. So this is something you can learn. The more and more scripts you watch over, you can easily recognize them forming in the chart patterns. So you just need to use these candlestick patterns. Don't use the line, don't use bar or the line patterns. Just use the candlestick patterns. From this, you can easily recognize these patterns. So this was our pole shape pattern, which we discussed. And then we discussed our cup and handle pattern. One pattern which I'll show you, which is universally accepted and which is formed when a script is rising from the downtrend. I'll show you in Tesla. If you are investing in US stocks, then it'll be then this script can give some bumper returns. So I'll use weekly chart since we are talking about mega trends. So if you see Tesla, I believe everyone knows who owns the Tesla. Elon Musk, who owns the highest percentage of the company and is also the CEO. So if you see from the top, this is a Fibonacci projection. It is a mathematical tool. A Japanese mathematician introduced this tool, a Fibonacci series. From here, you can easily identify the percentage the stock corrected. So nearly from the top, if yes, we are seeing the mega trend over here. I am riding the trend right from 2012 when Tesla was in dollars, meager $1. It went to $411. Then it corrected back to all near to 112. So that was near to decline by 70% in the stock value. So, so this was one of the major event. If I believe you are a long-term investor, so this much of a correction, and if you can identify the Tesla prospects, the future prospects, the economic policies in the country it is operating, the demand which is coming into that sector, definitely this would have been a cherry picking, I believe, since global countries are shifting to electric vehicles. So if we see the mega trend, I see a head and shoulder pattern forming. This is a textbook pattern. The one which we discussed was back pattern. Then in Tata Steel, we have discussed a cup and shape pattern. Now, one very major pattern which we are discussing now is shoulder pattern.
So shall I ask you the
So if you see,
questions put by the member?
1 minute. So this is basically a left shoulder. This is basically a head. This is my right shoulder, which is currently in formation, which is the right shoulder hasn't completed yet. So my starting point or my entry point hasn't came yet. My entry point will came when the script will come at $290. And once it crosses, I'll just watch out for the volumes here. Volumes will become quite high. And again, how we can decide the target, we'll see the length of our head, which is 190 pips. So I see stock riding easily to $480 once it breaks down from 290 levels. So it will, from achieving that height, how it will react, how mostly all stocks react is reaching on the target, because that is the point when, because traders are also into the stock markets. Traders invest for short term, like 1 year, 2 year, or 6 months, 7 months. So various traders are also entering into the market. You see the selling which is coming is, it is because of the trader community and the retails. The mutual funds, they are always the long term investors. So some retail investors are also there. So they get the long term benefits. So again, the stock will rise from this point. So a next wave of investors will enter from here, basically. Next wave of investor will enter from this point and stock will again peak to a new high. Yes, yes, Vinita. Uh, yes, Vinita, you may
So,
ask.
one member is asking, is HDFC Bank best stock to invest in banks?
Well, that is my, basically that is my viewpoint. Since we are here to discuss on the patterns to invest, to give you an idea how to enter into a stock market. Personally, if you ask me, that is my personal opinion. Basically, it is not a stock tip. I feel HDFC Bank will give major returns in few years, because the biggest merger of Indian history has happened. Two major entities have merged, and the benefit of that merger will be derived in near term. So it will take time, but the numbers will reflect on their balance sheets.
So the next question is, it is advisable to invest for longer period for better returns, safety of investment.
Definitely. If you see, supposingly, I'll give you an example of mutual fund here. Supposingly, you are investing in a mutual fund, you are doing a SIP. What is the concept of SIP? SIP is just an average concept. Your consistency of investment makes that average. Even the market is going low, you are investing on monthly basis. When the market is high, you are continuing with your SIP. So basically, you average out your pricing. So in case you are investing in an SDFC bank, supposingly you have make up your mind that you'll be investing on monthly basis into a HDFC bank. You have decided a certain amount. So you can keep on investing that SIP also in a particular stock also, which you feel that will give you a return. Then there is another thing over here is, whenever you see a correction in stock market, like if it is a 5% correction or a 7% correction, it usually comes after various months. In particular year, in almost every year you'll see a correction in stock markets near to 5%, but a major correction of like 20%, 25% comes in like half decade or after a decade. So this was a major correction which came in COVID. Although our markets would have not corrected that much, it was bit a panicky reaction. But I'll show you in a layout way that this correction was basically projected, always a projected correction as per Elliott wave, but the correction was slightly deeper just due to a panicky reaction which came because of the lockdowns. So that was very a golden opportunity to accumulate such stocks, because uh, at the end of the day, definitely the industries had to open. So this was basically a vision. If you if you were sharing a vision or relying on the growth story of India, the people have collected various stocks at that point of time and made a very big returns. People who have invested in mutual funds, they have averaged it very low. Who were already investing from down the line from 2010, they were regularly investing in 2020 also. So their averages came very low at that point of time, and when their averages were low, the return was quite big when the market came up. Yes,
That's
yes,
right.
Vinita, next question.
So there are no more questions.
Okay, okay. So this was our third pattern. Basically, I would suggest you can search on Google for more of the chart patterns. Basically, the three patterns which I've told you are majorly forming patterns in the scripts, in the stock scripts which you see. These chart patterns, in case you are a trader, you wish to make a quick money, then you can try it on a shorter time frame also, like a 1 hour frame or a two hour frame or a 1 day frame. So on a bigger frame, these are for basically investors, because to go till 190 on breaking 290, this script will at least take 1 to 2 years. So this idea was for the long-term investing. Now coming on to Elliott wave. So I'll illustrate the Elliott wave theory with our Nifty index. So this is our Nifty index basically. Well, in a Elliott wave, basically what happens is, in a Elliott wave, the cycle starts from a numbering basically. So each cycle in a Elliott wave has uh, five numbers. We number that cycle into five parts, which is one, two, three, four, five. One is followed by a correction, which is called two, where the correction ends. Then a new trend starts over, which is basically numbered as third wave. Then third is followed by a correction, which we number in this theory by four. And then again, the last pattern, the last trend of this theory comes is the five. The five numbering which we gave is here the trends end, then a major correction comes over. Then we can also number it. This was some, you can say, a smaller cycle. Now this is also, then this is a bigger cycle into that particular theory only. So my the grand cycle consists of various narrow cycles, you can say. My first cycle ended near 2008, when you remember, there was a crash of Lehman Brothers, a major bank crash in US that impacted our Indian markets also, but our bank sustained, the windfall was sustained because our banking sector was very strong and we picked up very hardly from there. And this, the crash of subprime crisis, which was named, we corrected till near to 61%. So this is a Fibonacci retracement tool. You can select this tool from here. You can project the correction from the bottom to the top. You just need to place this tool. You can see where we corrected. So basically now this is a longer term trend, you can say, which we are talking about, which covers a short trend, which started in 1990, went till 2008, then we saw one correction. So this was a correction which I'm highlighting. Then we went for a new trend. So this is a new trend which is continuing. So this is basically a third wave, which I believe, as per my counting, is where all my basically mathematical ratios matched over. So here is the third wave going on. Then we will somewhere have a fourth wave, which will have a correction, and then we will went for another new trend. So now I'll tell you some basics for this first wave. We can do with the theory part now. So basically, in an Elliott wave, uh, a first wave is basically a wave where the starting of a trend is there. When you see this on a monthly cycle, which we saw just now, our first wave started from 1990s, right from the inception of a stock market. It ended near 2008. We got a very major correction. From there, our markets went down from like near to 7,000 down to 2,000 point. Then from there, we had a new trend from 2,000 point to where we are today is at 18,000 point. So the trend took over like 15 years to came here. So this is a very major term investing, and using super grand cycle of Elliott wave, you can invest in stock markets. You can invest into supposingly, if I give you an example here, supposingly you were investing into FDs. If you go out there and Google what is our Nifty index return in last 20 years, you'll get a result near to 13%. So definitely our markets have gave you a better return than our FDs. So in case you are an investor who wants to take nil risk, near to zero risk, you can always collect Nifty Bs also. You will have higher return than FDRs. I can assure you that, because our Kargar growth rate return for our Nifty index has been near to 13%. So this is the thing which such theories tell you when you go deep into that. So this is the nature. The first wave, there is no point where the first wave can end. For first wave will be followed by a correction, which you can identify. Here I saw, here I showed you a second wave which ended near 61%. So first wave is always followed by a second wave, which can range from minimum 38% to 61%. So here our correction ended near 61%. From there, a new trend started. So coming on to my next, the third wave, which I so basically in this, what I saw is my third wave is also split into parts. This is my first. Basically, in a third wave, usually market doesn't correct beyond 38% because the third wave has a characteristic. It makes your wealth very quickly. It can double your wealth down the line in 1 to 2 years, also down the line in 5 years also. Here you can see my third wave. It started here. Now currently my fifth wave is going. My longer term grand cycle, third wave will end over here. So this is the sub numbering of the third wave in a narrow cycle. This is a super grand cycle, and this is a super cycle, basically the internal one. So we ended over here. We'll end it over here near 22,000. I believe Nifty will end up near 22,000. From there, we can see some correction down the line, which will be near to 18,500. From there, we'll bounce again. This range will now act as a support at some point of time in the near future. So coming back to on theory, first wave, this is the inception point, followed by the second wave, which can correct from 23.8 to 70%, but majorly it is 38%, 50%, and 61%. These are the levels which the second wave respects. Then there is a third wave, which I told. It is very sharp and steep. It creates gap in between because investors are now confident after wave two retracement. Every Elliott wave analyst or a long-term investor who uses Elliott wave to invest want to ride this third wave. Wave four. This is just I showed you. This was uh, this was the super cycle, which is a narrow from the super grand cycle, which may end near 22,000. In the super cycle, we saw the fourth wave, which brought the market from 18,600 levels to 15,000 levels. So this was the point where, in case you are applying a technique of mutual fund investing. So basically, markets corrected near to 17% from the top. So this was the point where you could have just, in case you are investing on monthly basis, you could have increased your SIP at that this major correction. Whenever you saw index correcting more than 7%, you can definitely increase your SIPs. Supposingly, if you are investing 5,000 monthly, I would suggest double your SIP at a index whenever you saw index correcting from like more than 7%, because you will make your averages very low, and this return which you will fetch would be higher in longer terms. Supposingly, a mutual fund is giving a 15% return. On a history of mutual fund, you have selected that fund, but you increase your SIP when the market fall more than 7.5%. Definitely, you will earn more in your mutual fund. That return can go from 15% down the line to direct 20% because your averages are low at that point of time. Now, after the fourth wave, basically fourth wave, whenever the second wave respect the percentages of 50% to 61%, fourth wave corrects near to 23 to 38%. So we will project usually the second wave. From here, the projection is made for the correction of the fourth wave. You can see it to 23.8%, and then it pulled back. So it respected the theory. So this was my second wave down the line in COVID. It should have corrected near to 8,800, but with Excel into 7,500 more with the panic in the COVID. So from there, it respected the 23% level, and now it is running for the ending of the super grand cycle. That is my super grand wave of the third wave, which will end near to 22,400. Then coming on to the last wave, that is fifth wave. Uh, Fifth wave is the last wave of an impulse in which prices make higher high, but at slower pace. Most of the retail investors who have seen price moving higher but have not invested yet will invest at higher level. Supposingly, various investors down the line who have seen pricing high, and then from last 2 years the market wasn't giving returns. Now you will see various financial influencers, various business channels will float this news that India story is very great, will reach 30,000 very soon. So these stories have to be watched carefully because being a chartered accountant, I believe you really need to judge the return which the index is giving. Like if I give a time frame over here, well, it took nearly 12 years for the index to reach from 2000 to 12,000. And within 2 years, it reached from 7,500 to 18,000. And now we are heading towards like 22,000 in some time, which can come by the end of 24, I believe. So within a span of 3.5 years, we would be getting near making from 7,500 back to three times of that index return. So definitely, I would suggest there is an indication that market is pretty overbought. So you can also see the indicators. The indicators always help you. This is a relative strength indicator which I'm adding over here with the Elliott wave theory. So these indicators basically, supposingly my top came here of my RSI, which is a relative strength indicator. The relative strength indicator indicates the behavior of the investment or the money flow which is coming into the index with the speed, with the volumes which has been coming into. So this graphs form basically on the data which is flowing into the market. So this indicates that my RSI went at the top in October 2021 when I was near 18,600. It came down. So it will indicate whenever I'll make the next stop, it usually falls below. So whenever in the long term investing, this is my theoretical knowledge of the Elliott wave, which I have seen in past. You will not see the strength in this RSI. So this would be one of the major indicators which can identify that whether the index have achieved my top or not. So it will again, what will happen is you will start seeing reversing from here whenever the next correction will come. So it will reverse from here. We call this pattern basically uh, negative divergence. When you make a new top, but with the data part of RSI, you do not make a new top. So this phenomena is called a negative divergence. So that gives somewhere you an indication that the prices are overbought in the market because we are using a theory with principles out there. So indicators help you, so which are formed by data itself. So this can sum up your findings that I am very much right in finding the top of my index. So from here you will see a reversal. So the moment it cross the top of this, then you may see a more new height from here. So you need to see this each time along with the theory part. So this will be a negative divergence. So every since after as we discussed that Elliott wave has five counting, there are two types of correction waves there. First wave is followed by a second wave, which is a corrective wave. Then a fifth wave, third wave is followed by a fourth wave, which is a corrective wave. So, and again, the fifth, which is the final part of our counting, uh, whether you take super cycle, super grand cycle, every fifth wave will be followed by a correction. So, correction happens basically in ABC format in Elliott waves. So, what happens is basically just drop down to weekly charts where you can see the correction. So, here the fourth wave of the third wave. So correction happened in this pattern. Again, the broader ABC can have sub ABCs. Like my super grand 1, 2, 3, 4, 5 can have a narrow super cycles, which are itself a 1, 2, 3, 4 counting. Likewise, it is in correction. The major ABCs have a narrow ABCs within them. So we'll read down the rules for the ABC. A correction starts at the A level. It can be of five impulsive waves and also a corrective wave. In some cases, it retraces almost near the start of a wave 5. So when I say my correction goes in ABC format, and then again I quoted you that ABC can have internal ABC. Supposingly, if I have said that statement to you that my A will have an internal ABC, which I can plot over here. This was my internal A, B, and C. Within the A, I have another ABC. And then this A can be of five nature 1, 2, 3, 4, 5, or it can be of ABC. This A within the broader ABC, it can be of impulsive nature. Impulsive nature means whenever we use the word impulsive, that means we are terming 1, 2, 3, 4, 5 counting. My A can be of 1, 2, 3, 4, 5 counting. This I'm talking about the larger trend. Or I can have A, B, C within that A. Now I'm talking about a correction within a correction, and then that correction, a smaller correction, which I've turned at the A part can be of ABC. Coming on back to the theory, as it says that it can be of impulsive nature or three wave correction, 1, 2, 3, ABC. See, we need to see internal waves to find out completion range of wave A. You can calculate ranges of wave A, like this is there are standard ratios again which are involved, like which I told you 38% is your golden ratio, which you can follow. 61% is your golden ratio, which you can follow while seeing that my correction has ended or not. B wave, which I said that B wave is the upper wave, which sometimes traders invest into or investors goes into, considering that a new trend is forming. It is followed by a correction which is very sharp, which is called the C wave. So amongst that B where we can witness fighting between bulls and bears. I called it dangerous because identification of eternal wave is most difficult in this wave. So one should be very cautious in wave B. Wave C. Wave C is an impulsive wave and last wave of correction. Like as I mentioned earlier, that the correction follows ABC. So in that part, A can be impulsive or A cannot be impulsive. When I say impulsive, that means 1, 2, 3, 4, 5. Or when I say A cannot be impulsive, that means I brought a narrow correction within the broader A correction, that is ABC. So, what is the characteristic of my C wave, which is the ending part of my ABC correction when I'm terming the super grand cycle? So, it can be of, it will always be of impulsive nature. So, the C ends with 1, 2, 3, 4, 5. Like in a rising trend, we count 1, 2, 3, 4, 5. C is a reversal of that. It is a vice versa of that. It is a declining wave, a C wave like structure, which is going in a pattern of 1, 2, 3, 4, 5. So Fibonacci calculations, wave C projects minimum 100% of wave A, like where my A has corrected and B started. So supposingly, if I give an example here, my price range was of 2371 points. My C wave will always be of minimum 2371. It can be larger than A wave, but it will, as per rules, will always be near 2371. Ideal projection range for wave C is 100%, and then it is 123% of wave A. Wave C can go to 161.8 percentage of wave A. Like it can be 161% of 2371, or it can be 123% of 2371. Where here you can project mathematical numbers. Definitely, one of the two numbers will click over here. So, three basic principles. Wave 2 cannot go below wave 1, which is a very major principle of an Elliott wave, where you are doing a counting 1, 2, 3, 4, 5. So the 2 can never breach the first wave. If it breaches the first wave, then there is a no start of a new trend. Definitely a correction is going on. So this is a principal concept of the Elliott wave which needs to be remembered. 3 can never be shortest of wave 1, uh, 1, 3, and 5. So this is the three wave which I said is very quick and which have a very great pace. It can never be less than 1 and 5. Wave 4 cannot overlap wave 1. The fourth wave cannot overlap wave 1 in any situation. There is one exception to it, which we'll read just now. As I suggested, second wave can correct from 23 to 61%. Majorly, it corrects from 38 to 61. If this principle is followed, then fourth wave will be near to 23 to 38 only. It will not go deep. Projection ratios, third wave can be 161% of first. Likewise, C can be 161% of A, or it can be 123% of A. So these are basically patterns. There is an impulsive pattern. There is a diagonal pattern. So I suggested here the first in a fourth wave can overlap first wave. It can only happen in a diagonal pattern. So I'll show you one diagonal pattern practically, which has happened in Union Bank. So here my correction ended. Then there was a start of a new trend. This was my first wave. I ended near 37. My second wave went very deep where my trend started. But you can see my trend started from 22.65, but my second wave correction ended near 23.10. It never breached my first wave. So we can say the principle of our Elliott wave has been followed. So this can be a start of a new trend. But what happened here is the after the third wave, my fourth wave breached my first wave. So what happened here is one, two, three, fourth wave breached the first wave and then the fifth wave. So what we call this phenomena is leading diagonal. Your first wave in a Elliott wave can be in a form of leading diagonal. Leading diagonals are always followed by a very strong rebound by pattern. The rebound back force is very strong when the leading diagonal ends. You can see 25th July stock was near to 32 rupees. By the end of 12th December, within 6 months, this is the third wave, my stock went to 94 rupees. So this is called, the gain was of 178%. This is called third wave, which is very cohesive in nature. This can make your wealth down the line in few months. In an year, it will always be shorter than a grand cycle. Supposingly, if my grand cycle of 10 years, where my 1, 2, 3, 4, 5 counting is there, the third wave would be the shortest, and that would be the most beneficial if you can catch in that grand cycle. What I mean to say is now super grand. I'm going back to super cycle. So leading diagonal. Likewise, my fifth wave can be of same pattern 1, 2, 3, 4, 5. In my fifth wave, again the fourth wave can breach the first wave. This is the end of my impulsive nature. Then the correction is of ABC nature. Within that, these corrections are there of different natures: simple, zigzag, 335, irregular, complex. This we have read. Leading diagonal, ending diagonal pattern we have studied. Corrective patterns, which we have just discussed. Key takeaways from this is that wave 2 cannot retrace more than 100%. That means it cannot breach the wave first, because it will invalidate my trend. Wave 3 can never be the shortest wave, as we discussed earlier. 4 cannot overlap wave 1 in impulsive wave. The only exception is leading diagonal and ending diagonal. Wave 3 is an extended wave, then wave 5 will not be extended. If wave 3 is not extended, then wave 5 will be extended. But wave 3 will not be shorter than first and fifth both. If wave second is complex, wave 4 will be normal zigzag. Extended wave will retrace 100% most of the time. Leading diagonals occur in wave 1, ending diagonals occur in wave 5. So basically, this was the key takeaways from our Elliott wave theory. Uh, the more and more practice you give to this theory, the more and more expert or a professional you become into this theory. I would recommend reading one book onto this theory after this seminar. This is basically, I have tried to reduce down your learning curve. I have been practicing this theory since from 2015 down the line 2023. It's been 8 years I've been practicing this theory. So definitely I can recognize patterns easily now because I've seen hundreds of charts. Likewise, I have tried to reduce that learning curve from down the line to 8 years, which you can complete down the line in 6 months to 1 year. This was an idea which I've tried to present before you through this seminar, which you can use, which is a very beautiful way to invest in scripts using mega trends. Read that book. That book is very beneficial. It benefited me. Definitely, it can benefit you. That is Fisher's book. You can type it on Google. It is available on Amazon. Order it today. Start reading it. Start applying the practicals on the charts. It has tons of examples over there, uh, which you can easily learn from, and then apply it on the real market or the past charts which are easily available through TradingView website. Then there is investing.com. There are several websites which are available where you can practice this theory easily. Well, that's all from my side today, Vanita. If there are any other questions, you can let me know. And definitely, guys, you can join my YouTube channel. I've recently started my YouTube channel with the name of CA Navjot Singh. Uh, the picture, you can recognize me with this picture over there, stocks, CA Navjot Singh at the rate Navjot Singh 1989. I've been sharing stock tips, and I've been illustrating Elliott wave here and some chart patterns also there for short terms for good returns. I've recently started it, and in one day, people have responded well to this channel. So, in case there are any queries, Vanita, I can take it.
Yes, sir. Thank you so much, sir, for enlightening us with all your knowledge and wisdom. There are a few questions from the member side. So, how can you provide your view on MTAR technologies?
MTAR.
AR. Yes, sir.
Okay, we can take this live on MTAR technologies. Look, as per Elliott wave counting, I can see this is on the third wave. Our first wave ended here. It corrected near 78.6%. You can see exactly my correction matched at this level. So my second wave ranges from, as the theory we read, my second wave ranges from 38 to 61%. But there are certain exceptions. The more you read on this theory from that book which I've recommended, or you can follow my channel, most probably down the line I'll be putting this course on a practical basis on free of cost for our brother and sisters, in this profession, because I want them to learn through uh, this theory and earn a lot of money. So my correction ended over here. So from here, I can project third wave. My third wave length is usually 161%, as I said. So my third wave length is basically 3623 coming. So, but since there are corrections that can be irregular also in the charts, so this can be an ABC correction. My B is going above, but the moment my B, since my B has crossed uh, 1.1, that is 2737, my reading, as I suggested, 1.23 is also a ratio, which is a golden ratio. The moment it crossed 2963, then we can say that this is not a correction, third wave is coming, or else it can be an irregular correction, which we read over here. The correction patterns. This was a correction pattern which we read. Irregular correction. Irregular corrections are always, the correction will go up from the past trend, and then again a downtrend will come over. So the current target which I see in my personal opinion is 2963, the nearest term. The moment it crosses this, then we can see 3623 coming. But since RSI is on the top, I see some correction can come. On a weekly chart, this is showing an overbought range. So this could be a point from where the stock reversal can be seen, 2963. Yes, Vinita.
So the next question is, Warren Buffett prefers fundamental analysis over technical analysis. What are all your views on the same?
Yes, definitely the fundamental analysis which we discussed, that is, you need to understand economic trends which is prevailing in the market, the sectors which are growing, which will be growing. Like if I give you an example, if you read that book, there's an example of Coca-Cola stock. In 1980-85, Warren Buffett had a vision that this Coca-Cola drink will be a drink in coming years. It will land in each household. It will be the most preferable beverage with your junk food. So this was his vision, which made him invest into that Coca-Cola stock. He holds a chunk of that stock, which is one of his major shareholding. So these kind of visions, and then you need to track regularly the numbers, for which I have given you one of the example, that is screener.com, where screener.in, where you can definitely crunch the numbers on year basis, where you can see the EPS, you can see the EBITDA rising on year basis, the dividends are being paid on year basis, operating cash flow is positive, fixed assets are increasing year basis, and that fixed assets return is being reflected on the revenue numbers. Your ratio should be good for the revenue numbers, the return on fixed asset should be good. So these are the things which can be used for a fundamental investing, and he's been using that. So the technical investing comes into play, which I have been using. Usually, I've been applying it down the line for 1 year trend, 4 months trend, 6 months trend. Because if you can predict the direction using this theory, which is a scientific theory, this is not a gamble. So this is a scientific theory with numbers crunching. You can always project the targets. You have the bottoms also projected. So you have a vision where you are going basically. So that vision imparts you with the confidence that you can definitely make better than mutual funds. Mutual funds are for those who do not know the such kind of theory. Fundamentals, if you are good in numbers, like in MAFA, we have studied a lot of numbers. We have accountancy. We are expert in this. We have been making balance sheets. So fundamental and mutual fund will always be there. This is something additional which I have elaborated today, which I have emphasized on today. So this is something which you can practice, you can learn, you can make wealth on shorter time frames also with this theory. Thank you.
So the next question is why technical analyst gives a stop loss number along with target price if they have read chart pattern accurately and forecast upward trends.
Look, as I said that the moment we discussed, if my second wave breaches my first wave, then it is a failure of a pattern. So if a trend has started from somewhere, if I started my counting, then definitely first bottom will be my stop loss. The moment my second wave breaches my first wave, it my counting in a Elliott wave, my start of a new wave. Just if you see a sea wave in, there are some of the sea waves which fail to rise. They are flatter waves. They do not rise. So in the same performa in a stock market, a trend starts, sometimes trend fails to start, there is a no new trend, the correction is continuing. So this is the reason the stop losses are given, because you are totally relying on the numerical numbers of Elliott wave to trade. Or for a longer term, if you are posing the stock on Megatrend, it has corrected from this point till 78%. So I would have never mind investing in this point. And I will never keep a stop loss because my vision is for 10 years. But if my vision reduces down to 1 year, so that is the reason for 6 months, 1 year we take stop losses, because we don't want, because we have relied on this number and we do not want to lose our capital, because our vision is very small. That is 1 year and 6 months. We are very much clear about our policy. We do not want to invest more than 1 year. But the moment you saw this correction of 78%, and along this, what I'll do is, if I would have been there down the line when the stock came to 61%. So this was my 61% correction, and then 78% correction is there. So supposingly my stock came here, I would have start reading about MTAR. I would have studied its balance sheet parallelly. Although I'm using a principle of Elliott wave, but I also need to consider this because I need to know if the management is good. For example, Yes Bank was at one point the favorite of the market, but it management failed, and then the RBI came into picture. You can see where the stock went into. So at that point of time, when the management, when the principal issues are there within the stock only, so these theories also fail. So at this point, I would read once its balance sheet. If I see along with that the numbers are good, management is good, then this is a perfect stock. It becomes a perfect stock for the long term investing, because it is down 78% from its top. Its fundamentals are good. Its management is good. Then it is a very good script for investing. So you need to play it with rules. You need to club, basically what we have read today is the fundamentals and then the Elliott wave theory, both if clubbed together, at that becomes a very great weapon to earn in stock market.
Yes, sir. So the next question is what are the sectors to focus on till 2024 election? 2024
Well, I would suggest, look, elections do have an impact on stock markets. Supposingly, if market is expecting some political party to win the elections, if a vice versa of that comes in for 6 months, 4 months, there can be some impact. But if you talk about broader trend, the mega trends, that will not impact much, I believe. Reason behind, the economic factors are good for our country, and the sectors which you can focus on is, that is the EV sector is there, healthcare, which I have termed, the financial sector will play a very major role, because now is the inception of geo financials. There are the geo financial has been termed as second major NBFC after Bajaj, I guess. So these are the major players, and the major credit injection will be there into the economy, because our honorable prime minister has shared a vision of $5 billion economic GDP. So definitely when the vision is shared and the policies are supporting that vision, and industries are coming into picture with the favored policy, you can go with those industries. So, so these are economic things which have we initially discussed, that economic trends, industrial policies. So if these are favorable for a particular sector, you can select that sector and go with the investor.
Sir, the next question member is asking your views on Centum Electronics as per chart pattern.
Santam Electronics.
Yes.
Okay. Do we have any other queries after that?
Sir, they're asking about the book name you referred.
My group name is CA
Sir,
Navjot
book
Singh.
name. Sir,
Book
book
name
name.
is Fisher.
Yes.
Book name is Fisher. You can also subscribe to my channel because I'll be sharing a lot with that would be more easy for you. Okay, and Centum, Centum Limited
Centum Electronics.
is, I cannot
Sir, it's
see.
Pentun.
P E
Cen. P.
E N T N. Okay,
P. C.
T E N T.
So C.
Okay, P. Phantom.
So I'm putting on
Centrum,
its chat
Centrum,
box.
Okay, please put in chat box.
Centrum Electronics.
Okay, Centrum. C. Centrum. We'll use the 1 month time frame. Again, you can see that we are on the third wave. From here, I see a target of 24. I see a target of 2470 in long term. So one can stick to this script, and 1000 would be the point in case, since I'm using a 1 month time frame, I'm not going into daily or a weekly time frame for earning. I have a vision of 5 years in this script. This would be my accumulation point. This range would be my accumulation point, 16 to 1100 points. My ultimate target for would be this. From here, I can see consolidating in the script for down the line 1 year. So it will start going sideways after achieving this target. So this would be the long term target for me, down the line 2 to 3 years. Yes.
That's all the questions. So thank you so
Okay.
much for sharing your valuable thoughts.
Okay. Thank you. Thank you, Vinita.
Now I would like to introduce our second guest speaker for today's session, CA Nimish Maheshwari. Sir is a distinguished chartered accountant and a co-founder of Beat the Street, a platform that has garnered a substantial social media follower of over 60,000 subscribers across various platforms. His expertise and insights have established him as a trusted voice within the industry. His profound understanding of the financial landscape has led to his insights and analyses being featured in some of India's most esteemed publications, including the Economic Times, the Dalal Street Investment Journal, Fortune India, the Morning Context, the Ken, as well as Money Life by Suchita Dalal. As the heart of his contributions is Beat the Street YouTube channel, a veritable gold mine for fundamental analysis. His dedication to empowering investors with knowledge is evident through his influential Twitter handle, which consistently provides valuable insights and analysis that aid investors in making informed and strategic investment decisions. Over to you, sir.
First of all, thank you so much for inviting us, and all those who joined on the this evening on India versus Pakistan match. Thank you so much for listening us. So I will be sharing on the very fundamental things not on the not on the technical side, like how Navjot shared, but I will be sharing PPT. Just let me just share my screen first. Can you see my screen?
Yes, sir.
So yeah, the question is that how you can bet on the India growth story, and the today's topic is megatrend investing. How you can pick a megatrend. So from basic, we will start that what is a megatrend. So first we need to understand what is the megatrend. So let me first put it in your definition. Like megatrend, what is megatrend? So megatrend investing is just tracking a long term changes in the economy and businesses. So you need to first think about the economy or business as a cycle. Then you find a long-term growth story and become investor in the particular industry or as well as any economical trend. So once you finalize that any trend or any business cycle or business long-term changes, it is not like 6 monthly, 3 monthly, quarterly changes. It should be a more long-term, like 3 year, 5 year, 10 year down the line. So, like if I give you an example, what you can say is a mega trend. So I will give you an analogy of three terms: Geo, UPI, and GST. So these are three signals which we have seen from 2016 to 2023. So if we talk about Geo, so like let me share you a graph. So you can see that how much does 1 GB of world data cost across the world. So you can see this chart, it's presented by FinShort, and you can clearly see that India is one of the you can say is a very hyper competitive and very very cheap data we are operating in. And where we are seeing like global average, it is around $6.89, where we are operating at like 10% of the global average. So it's just 0.68. So like 1 GB data cost, it started coming down when Geo entered into the market. So before 2016, we have not seen any company which is giving us data like free or at a very cheaper level. So I think many of you know, and many of you have used the 300 rupee per GB data pack also. So the point I want to make is it's come as a mega trend. So after that, like agar if Geo was not there, I will not be part of this session, because my journey started from YouTube, and YouTube is possible just because of Geo, because it gave us power, or it gave us a power to retail or a small individual to showcase his skills, as well as showcase what he can do and what he where he can reach. So after that, you have seen that there are a lot of person wants to be a YouTuber or wants to be a there are a lot of businesses, like if you talk about Zomato as well as Policy Bazaar, Naukri.com. These all are became a household name because of the Geo, because the consumption of the data rose like 15 times, which is a very very, and India is a country of 140 crore plus people, and that give a boost to the whole economy. It's not like one industry or one segment changed. It changed everything. It changed the whole economy. It changed the whole ecosystem. Now we are talking about tech companies, fintech companies, everything is health tech companies, everything we are talking about as a tech. And this is possible just because of Geo. So I just want to highlight that what is megatrend. So this is the example of megatrend, from where we started as a which is we started as an internet economy, and there are a lot of examples, like Paytm came to the market because of this Geo. Now the second example which I want to talk about is a UPI. So UPI is a game changing platform for India. Like when I still remember those days, like 2017 2018, where we need to stand by line on the after the bank. So we need to stand by line so that we can deposit or we can withdraw the money from the bank account. Now after coming UPI coming into the picture, it's a non-profit, real-time, low-cost or open architecture. So any company wants to use it, can use it. And UPI is a mobile-first architecture. So like when Geo came into the picture, it gave power to the individual via internet, and where UPI came into the picture, it gave power. After Jan Dhan Yojana, there are a lot of financialization happened, and UPI just accelerated the power of these financial transaction into the economy. Like you can see this example, it's a clear cut show. It's a clear cut vision. You can see like from 2020, where the volume of the transaction is 12.45 billion transaction, it came to like 140 billion, which is seven and more than 7 times or 8 times of the transaction in last just 4 years. Now if we talk about the value of transaction, it's $21 billion to it. So the transactions volume is 12 billion to 84 billion, which is 7 times. Where if we talk about the value, then it's like 21.28 billion to 140 billion, which is also 7 to 8 times. So the financialization and the economy started becoming formalized after UPI came into the picture. So this is again a mega trend, which which where the companies like Paytm, companies like internet-based companies, or companies like you can see the Freecharge and various other companies, or even the existing companies started using these architecture, using these technology, became disrupted in their own space. So this is again a mega trend which India has seen. Now the third point is, which is a GST. So GST, one tax, one nation. The whole GST, when GST came into the picture, every state has a different different altogether, different rules, regulations. When GST came into the picture, then everything is streamlined, everything is formalized. So if you are buying from like Delhi, you are selling it like Rajasthan, then everything is formalized. So you can connect, and there is only one platform where you can submit all the data. So the industry and the you can say the industry as well as the businesses started coming and started becoming more formalized after UPI came into picture. So all the transaction went into the you can say that all the transactions are routing from the bank. When the GST came into the picture, then all the person need to abide by the law, and the economy overall became more formalized. Now when we see GST, then you can easily see that this is the yellow chart is the GST collection FY 22-23, where GST collection 23-24. So you can clearly see that whenever we are talking about the UPI, the numbers are rising at a very exponential phase. And when we talk about the GST also, then the numbers are rising is like crazy. So like 148,995 crore ka GST collection you can see in the last year July. Now it's rose to like 1,65,000 crores in the July 23-24. So the point I want to make is the economy is becoming more stronger in terms of law, as well as in terms of the compliance part. So these are three things which change the India across. Where we talk about megatrend investing, it's uncovering, identifying, and understanding all these transactions and how the businesses operate, how the consumers behave. So changing of the behavior, we need to figure out कि अगले आने वाले 10 सालों में, अगले आने वाले 5 सालों में, 10 सालों में क्या चीजें चेंज होने वाली है, क्या क्या अपॉर्चुनिटीज आने वाली है. So you can one thing you can clearly see is the artificial intelligence. Like this is the, if you see that this is the ChatGPT. When ChatGPT came into the picture, it is the one of the fastest downloaded or one of the fastest used website across the world. So that's how the things are changing. Now we talk about like megatrend investing, then it needs to be the core of investors portfolio. Now let me take you through that what is the case study. So I will not take the the name of the company, and if I am taking, then it will not be advisable to invest, because I am telling you this is just for educational purpose only. So one example I want to share with you, this is a one case study. This is the chart from 98, like from the year 98 to year 2007-8. So what changed in India? So that's how you need to figure out कि अब क्या होने वाला है. So like three things happened. First is favorable demographics. So in India में there is a huge English speaking population which know how to speak English, how to use English. And another thing is in 1980 or आप कह सकते हैं 1990, Indian government did a very good thing when they introduced IIT IIMs into the it gave to the India. So people know, or people started understanding about the technology, and at a very decent at a very decent stage. And 90s, after that, when the startup and when the when the website or when the www dot boom started or internet boom started, then India came into the picture and it became a global delivery model for every company across the world, and it became a hub where you can provide services to across countries from of the software. So India became the hub for software and started. So if you have invested in this company, you can generate a return of like 60x, where if you invested in the Nifty, you are not able to. So if you are trying, if you find, or if find out these companies which are investing, which are part of these mega trend, so वहां पर भी अगर आप देखेंगे तो from 2000 to 2001 जो इंटरनेट बूम फटा था, उसके बाद still the companies started using the technology in a very better and efficient manner, and then it became like a company of 60x in just a span of you can say 10 years. So where the Nifty gave return of a very simple and very basic returns. So the point I want to make is, if you are able to identify and if you can ride for longer term, then this is the kind of return you can generate over the period. If we come to the second case study, then it's a lending. So after 2007-8, when the Lehman Brothers happened, so again there are three things which is positive for India, that the India's per capita income rose from like $500 to $1,000 in 2000, from 2008 to, if we talk about 2016-18. So again, the next 10 years, if we are talking, the first thing which I want to talk about is the digital banking CIBIL scores. So what changed? The government changed the whole ecosystem, because after Lehman Brothers, the government understood that these things works and these things not work, and they come out with certain regulations. So RBI came out with certain regulation that these are certain parameters which gave to the bank or which gave to the NBFC that you need to follow. So one common parameter is introduced, which is CIBIL score. So whenever like your CIBIL score is certain percentage or certain number, then you can't distribute that person the loan, आप उसको नहीं दे सकते हो. And the digital banking came into the picture post Jio came into the picture. So when Jio came into the picture, then digital banking started becoming a thing, because before this everybody is going to the bank and started lending. Now the things changed, and now everybody is if you are seeing like if you are listening to the banking sector's con call, if you are thinking about, if you are listening to the NBFC con calls, then you came to know that now everybody is everybody is shouting for personal loans and everybody wants to go for the retail loan. Now what happened in the 2008 to 2018 or 2015-16, I want to tell you that everybody is rushing towards giving loan to the not only retail, they are more focusing on the corporate side. तो कॉर्पोरेट में क्या हुआ, जब रियल स्टेट में आपने बहुत लोन बांटे, इंफ्रास्ट्रक्चर में बहुत लोन बांटे, एंड इंफ्रास्ट्रक्चर इज अ साइक्लिकल. सो व्हेन इंफ्रास्ट्रक्चर इज ऑन द बूम, तो everybody gave loan to the infrastructure companies, everybody gave loan to the real estate companies, but these are the cyclical companies. So when the market was in a dull phase, then everybody and all these companies go like so everybody is on the dip side. So the problem started from these companies when you are not doing a better underwriting. So the problem with whenever you are investing in a bank or any NBFC, the problem start when you are when you are not seeing that how this bank or how the like Yes Bank क्यों फटा. तो Yes Bank के फटने के पीछे रीजन था क्योंकि उनकी अंडरराइटिंग इज नॉट प्रॉपर, और उनके जो रेगुलेशंस थे, जो अराउंड आरबीआई के जो रेगुलेशन उनको फॉलो करने थे, दे आर नॉट फॉलोइंग दैट रेगुलेशन. तो you need to be you need to understand, and you can easily understand that where any company, where any NBFC or bank is investing, you can easily see from their investor presentation, as well as you can easily reach out to the company or reach out to their CS or the company professional to understand where they are investing, where they are putting their money, to understand like if you are investing, like your 50% investment is into the real estate or any particular sector. Like now companies are putting money, or the banks are putting on bank, and NBFC are putting money into the SME segment. Everybody is booming, like NBFC and bank, everybody is saying that SME में बहुत boom आने वाला है. The problem starts when first, or then few NBFC जिनका पूरा exposure SME sector में है, वो फटना start होगा. तो when that thing start, then it will become a spiral. क्योंकि वो एक चीज हो गया, फिर उसके बाद दूसरा चीज तीसरे को इम्पेक्ट करेगा, एंड अल्टीमेटली द पर्सन हु विल सफर इज ओनली द बैंक एंड द एनबीएफसी, बिकॉज वहां पर सबसे बड़ी प्रॉब्लम स्टार्ट होगी, बिकॉज उनका पैसा घूमना जरूरी है. If the money is, if money is not able to flow in the particular banking or the NBFC, then the problem will start. सो नाउ व्हाट आई वांट टू टेल यू इज दैट वो वाला जो फेज था, तो वहां पर अगर आप देखेंगे तो स्टिल एंड निफ्टी इज नॉट एबल टू बीट दैट रिटर्न विच एनी लीडिंग रिटेल बैंक हैज गिवन. नाउ एवरीबडी इज फोकसिंग ऑन द रिटेल एज वेल एज कंज्यूमर साइड. नाउ वी नीड टू फोकस दैट अब जो आने वाला जो समय है उसमें किस तरीके से हाउ दीज अंडर राइटिंग इज हैपनिंग, एंड वो जो एनबीएफसीज हैं और वो जो बैंक है जिनमें आप इन्वेस्ट कर रहे हैं, क्या वो उतना रिटर्न जनरेट कर पाएंगी या नहीं कर पाएगी. ये आपको देखना पड़ेगा कि वो किस तरीके से अंडर राइटिंग कर रही है, क्या एक्सपोजर is only dedicated to just one sector or one segment of the across the portfolio. So you need to better understand about the portfolio. Now we talk about the case study 3, which is a Indian chemical industry. So here again the three things which is positive for India was कि there is a lot of regulatory changes happened post 2019, and now this is again a trending theme, which is China plus one opportunity, which is very very good and very very you can say that very you can even there is a enough opportunity size that every Indian manufacturing as well as every chemical company can ride on, and as well as you as an investor can also ride on. So here are three things happened. That one is a regulatory and policy change happened in the India that give rise to manufacturing, and that give rise to the chemical industry. So there are a lot of licensing requirement which was there, and with the things are coming that doing ease of doing business in India, where they are started coming into the picture, then these all manufacturing and every theme related to manufacturing and the licensing came into on the डिक्लाइनिंग फेज. बिकॉज जब तक आपके रेगुलेशंस मार्केट में ज्यादा रहेंगे तो पीपल विल नॉट एंटर डायरेक्टली. लाइक अगर हम देखते हैं कि फ्रॉम इफ वी सी लाइक 1947 टू 1990 देयर आर लॉट ऑफ रेगुलेशन अक्रॉस द इंडस्ट्री, एंड इसके कारण क्या हुआ कि देयर आर लॉट ऑफ इंडस्ट्री विच हैज पोटेंशियल वेयर दे कैन where they can become an export hub. वहां पर चाइना ने जगह ले ली, एंड इंडिया became a laggard in the particular industry. Now what is happening, like India, if we see that India is now at a cusp, everybody is in the globally, if you can see that everybody is talking about India. What is happening in India is that every the regulation is changing. First, another thing is there are problem in the China also related to the pollution, which lead to increase in the cost as well as that restrict their growth, because they are not able to expand their capacity. Where if we see that India is giving a very better infrastructure, as well as like if we see that there is a logistical problems was there earlier. Now after Nitin Gadkari came into the picture, or I will not name, but the government is doing very good job in terms of the infrastructure development, as well as road, as well as if we see that the Vande Bharat Express. So the railway as well as infra, the development is going at a very rapid pace. If we see like last 3 years after COVID, you can see that development is like killing everywhere. Now the third thing is that the global companies also looking at China as also looking at India as a sourcing partner. Like if nobody wants to live only on the China. Everybody wants, like if we see that recently we heard that China, that the Apple is shifting their manufacturing phase to India. So why they are doing this? The problem is that they are not only dependent, they don't want to remain dependent only on the China. Everybody wants a second global delivery center. Like even if you are talking about the service industry also, everybody is looking for a company or a country which can help them in creating which they can help, and they can contribute, and they can grow their global delivery services across the platform, across the countries. Now if we talk about that, what happened in the chemical industry, and it's still going on. So I am telling you, like from 2019 you can see that 2019 to 2028 or 2030, India can become a hub for I'm sorry for the delay. So the point I want to make is the Indian chemical industry is still growing, and it can still grow at a very rapid pace. And if you see like 2019 to 2023 or 2024, it gave like 6.35 times returns. And where if we see that the other Nifty 50 and the Nifty 50 companies, the returns are very less. So you what I want to say is that if you ride on the particular industry, particular sector, or particular company which is based on the mega trend, then you can get a better return or get a better investing portfolio rather than just investing without knowing anything. Now we will ask that what are the sources, how you can find any mega trend. So here are the acronym like TRENDS. So trends is the acronym for this. So one thing is that the technological. So anything like if I'm talking about like UPI, if I'm talking about Geo, everything is related to technology, and India is investing heavily or heavily in technology. So digitization and tech transformation is the one thing or one theme which will remain in India. So if I give the example like technology and digitization, so UPI, if you can see that the transformation like FY21 to 26, the projection is like the number of transaction will increase to fivefold by FY26, and it will rise to like 3060 billion dollars transaction. So this is giving a clear cut view that any company, and this is taken from the source like Paytm RHP. So Paytm ke red herring prospectus se hi, it is taken. So the point I want to make is all these companies which is backed by or which is using interface of UPI can rise their revenue and rise these kind of transaction many folds. If we talk about the another thing is the changes in regulatory. So changes in regulatory is like PLI scheme. So PLI scheme is announced after COVID happened, and then Indian government changed a lot of things, and that gave rise to Indian manufacturing. So what happened in that particular thing is ki $33 billion capital outlay was given by government, and the push is given by government to the manufacturing companies, because India is good at agriculture, you can say, not in terms of the overall production, but in terms of the employment generation. India is good at agriculture, where we are seeing that the services economy, like if you can say primary, secondary, and tertiary. So the primary and tertiary engines are growing, but the secondary engine, which grew in terms of China, if we see that the growth of China, which has happened because of the secondary market. If we are talking about India, that India the market grew by service industry, like outsourcing industry, like TCS, Infosys, when they came into the picture, then India started growing. Now the Indian government wants to focus on the PLI scheme. If we talk about the PLI scheme, the potential revenue that can PLI generate is $455 billion, which is not a small number if we are talking about India. And that will not only in the manufacturing sector, it will give jump to each and every industry, each and every sector. So any company which is using PLI scheme, so you can have a look over it, and you can ride the path that the PLI has a clear cut guidance कि यार आपको इतना पर्टिकुलर आपको कैपेक्स करना पड़ेगा, इतना रेवेन्यू का आपका टारगेट होगा, तब आपको PLI मिलेगा. So this will start reflecting in 2 year 3 year time the line. So you need to pick the companies. So like first is the technology. You need to think about that what are the companies which is riding on the technology. Another is what are the companies which is using PLI scheme as a benefit to grew their capex, grew their revenues. Now, another thing is that economic. So economy, if we say that the Indian economy after GST, which I told earlier also, that they started becoming more formalized. If we see that if we give the example that the BNPL transaction is expected to grow by 5x. So like UPI is also growing at a 5x. BNPL, which is the, you can say like this is the replacement of a credit card, which is coming into the like mobile. You don't need to do anything, and you will get the credit period of one month. So this will give you a jump. This will the transaction of these type of transaction will give you a jump in the economy, overall economy, because when the credit growth happens in any country or any economy, then it will give not only jump to the financial market, it will give jump to the various industry as well as various sector and various companies. If I'm talking about the nature, so when we talk about nature and the green consciousness, तो इंडिया में अभी इतना ESG पे फोकस नहीं है. तो अगर ESG होता क्या है, तो इकोनॉमी, so environmental, social, as well as governance. So these three terms like ESG became a very trending topic for the overall global scenario. Like if we see that the G20 summit में भी आप देखेंगे तो there are lot of conferences happening on the ESG concern only, because the rising concern over the the pollution, the rising concern of the global warming, this lead to focus these all companies as well as all the economies to focus on the green thing. तो green thing होता क्या है, तो like if we are investing in the India, if you are investing in the EV, so EV production, green hydrogen, like अगर आप देखेंगे तो Adani is also investing in the green, via Adani Green Energy. If we're talking about the Reliance is also investing. Tata Motors की बात करेंगे तो Tata Motors is also investing via in the capex to drive India's EV production. So if what is the example? If we see the example of the India's EV production from FY21, it can grew to 28x to like 16.9 units, 16.9 million units. So the potential of the green economy is very big. Like if we talk about the carbon credit market, which is not yet started in India, but it is already becoming a very big theme in the world. So the India has a very much potential. If we talk about the solar, if we talk about if we talk about the green hydrogen, wind energy, everybody, and आप देख सकते हैं कि इनकी companies ने काफी अच्छा return भी दिया है. If we see that last 1 year, 2 year down the line, and everything is backed by infrastructure, because Indian government is focusing on the infrastructure development, as well as Indian government is focusing on the ESG as well as the green part of the economy. And the green part of the economy, which is like EV production, increase in EV production, focus on the companies which is giving solar energy, which is not focusing on the coal production, because that all give the problem and the pressure to the economy, because the countries like USA and UK put a taxation, put a cess to the any countries from where these products are coming, and they are not using the nature green green energy. अगर ये सब use नहीं कर रहे होते, तो they have started putting, and the amount and the value of the product will rise over the when we are talking about the global scenario. Now another thing which is coming into the picture is the demographic. So Indian demographic dividend की अगर हम बात करते हैं, तो the 50% of the Indian population is from the age between the young age, and the young age has a much more power. Like if we are talking about, like this is related to startup, but if you are seeing that the unlisted as well as you are seeing like startup market, it is on the boom. If you think that the FIIs are not investing in the Indian listed market, which is they are started investing in last 1 year, you see that they reduce their spending on the Indian listed market. But when you see that the overall spending in the Indian market, you find that the numbers are very good, and numbers are very good because they are highly investing in the startups as well as the unlisted market also, and that give boom to the overall economy, because it is not only the economy is not only the listed part only. The economy is also have unlisted as well as startup in their ecosystem. Now, what demographic dividend India has, that the working population is very big, and they have a potential to use that particular customer base, as well as तो कंज्यूमर भी यहाँ पर है, प्रोड्यूसर भी यहाँ पर बन सकते हैं. तो इंडिया इज चूजिंग द मैन्युफैक्चरिंग पाथ नाउ, एंड एक्सपोर्ट ऑफ सर्विसेज इज ऑलरेडी देयर. तो all these services are there, but now India is experimenting with the manufacturing setup, and they want to expand their manufacturing with the demographic dividend, which is like there. If you are talking about like e-commerce space, so you can see like the transactions which is like 150 to 180 million, which can be possibly grew to 350 to 400, which is 2.7x by FY25. So the potential, or the whenever these all things will happen together, then the total addressable market, which is STEM, which can grow multifold, and that's where the possibility and where the opportunity lies. and the last is S, which is social. So social, what is happening is the increasing in the rising consumer behavior and the rising urbanization. So urbanization and consumer behavior is on the, and the social behavior is changing. Everybody wants to, like, if we see that there is a lot of companies like Burger King, like QSR companies, like if you see, like in the COVID, if you see, there are a lot of companies which just came into the public market post COVID. But why they are coming into the, like QSR is becoming so big trend. Like पहले अगर अपन देखते थे तो 3 साल पहले only and only Domino's was there, which is a Jubilant Food Work जो company है. Now there are a lot of companies with a lot of option available to invest in the listed market also. पहले which is not available. Now Zomato is listed, so you can invest in the grow the rising consumer. अगर आप जो consumer का जो पूरा market है, social behavior which is changing, you can invest in that. So I want to tell you that these are the sources where you can find that, to where you can ride on these mega trends. So now this is how you can find a mega trend. These are the sources where up now you will ask me that what is the process, like how you can how you can, or anybody wants to invest in the mega trend or invest in any company, how to find a sector, how to find a stock. So this is so on Beat the Street, what we do is we have a YouTube channel, as well as we are available across the platform, like WhatsApp communities, like a Telegram, Instagram, everywhere. We are available on the website also. Everywhere we have a different philosophy. Like on Twitter side, we are just writing on the governance, corporate governance side. We are writing on the Economic Times, the Kane Morning Contest, where we are writing that how one can avoid a company which is not following a corporate governance, which is not right at the corporate governance. Where we are talking about YouTube, we are focusing on the fundamental analysis. So anybody, or everywhere the population is different, so where we follow the fundamental analysis part. So why I why I'm talking about this topic, because there I already analyzed about a lot of companies which is coming from the top down analysis. So there are two type of analysis. One is top down analysis, and another is bottom up analysis. So when we're talking about top down analysis, the most important thing in mega trend investing is you need to understand the sector first. You need to understand what are the companies, what are the sectors available where you need to invest. So first is unveiling the future growth potential. ऐसे sectors में invest करना है जिनमें potential और future growth की potential काफी ज्यादा हो. The first point is the strategic vision. You need to identify those companies. If we are talking about, like, if I will give you example of what happened earlier also. So you need to find a company with a vision, or a company, or as a sector where there is a long-term vision of the companies have. So you need to find long-term shifts in the revenue and the profits. Like बहुत सारी companies है जो stable पड़ी हुई है. Like अगर हम बात करते हैं, if we are seeing, like 2-3 year back, nobody is talking about steel, because everybody wants to steel तो बहुत dull factor था. Now suddenly, because it's a cyclical sector, there you can find that the revenue and the profits rose. But the problem is it is started because everybody is the export is moving up because of the supply chain disruption. Then the pricing started increase. Pricing is on the top. When we are talking about like 21, 22, the years are for the steel companies only. Now we are seeing like 2023, then the started coming down. But everybody started on the capex cycle, because India is on the, India is becoming an infrastructure hub. Everybody wants to invest in India and as well as in Indian infrastructure. So the steel is the primary, and steel is the, you can say that the heart of the economy when you are talking about infrastructure investment. So there is a long-term shifts in the revenue as well as profit. तो आपको वहां देखेंगे तो revenue as well as profits are on the very uptrend. Now we talk about the 6 sources कि आपको पता कैसे चलेगा. तो हम ऑलरेडी बात कर चुके हैं इस पे. तो ट्रेंड्स का जो एक्रोनिम है, सो मैक्रो इकोनॉमिक ट्रेंड्स, which is tech, societal, regulatory, geopolitical, as well as environmental trends. So when these things change, when these sources change, so you need to put a you need to start picking that particular trend or particular sector. When the sector impact, so the third thing is the sectoral impact. So overlay trends on the sector to assess the direct and derivative influences. So what this term means is, so there are two type of investment you can do. Like if we are talking about the vehicle industry, like automobile industry में अगर हम बात करते हैं, so there is a two segment. Like one is passenger vehicle, one is CV, commercial vehicle. So everybody is talking about commercial vehicle because whenever the government came with the scrapping policy, the first thing which go into the dull is your consumer vehicle industry. So consumer vehicle में अगर आप देखेंगे तो everybody is using like 10 years, 20 years uh, old truck. Now when these things change, so first and foremost industry which is a direct beneficiary of all this is consumer vehicle industry. That is a CV industry. When you can also invest in a derivative industry, which is a derivative of the direct industry. Like you are not able to invest in a like Tata Motors or Ashok Leyland because you don't like these company or you don't want to invest in these company. Then you can invest in a derivative companies. So you can easily find those who are the supplier to these companies. So that is called the proxy investing. So you can invest in all these proxy companies where and all those companies which are investing or which are giving parts or which are giving auto parts to these companies. So ultimately अगर आपका CV segment बढ़ेगा तो आपको automatically आपका proxy investing जो है उस segment को भी बढ़ना पड़ेगा. Like if you see like in the last last 2 years the FEM industry which is giving to the Ola the headlamp and all these things, their share price is on the rise because Ola is not a listed company, so you cannot invest in the Ola, but you can invest Ola via the proxy investing in the PM industry. So this is just an example. So there are a lot of examples. Like if you don't want to invest in a sugar company, but sugar is a trend, ethanol is a trend, but you want to proxy invest in these companies, so you can use Praj Industries as a tool where they are helping all these companies to create an infrastructure, create a the ethanol plant or create an the sugar plant across UP or across anywhere where they want. Now the fourth thing is the beneficiary focus. So you need to support companies in the particular trend कि ये companies है जो better beneficiary बनेगी across the trend. Like अगर मैं PM industry की बात कर रहा हूँ तो there are other companies also, but when you find that this particular company can ride or can encash the opportunity which is available to the market. So this is the fourth thing you need to focus on. Now the fifth thing is that the diverse growth. So you need to don't need to focus only just one theme. Like if I'm talking about ethanol, if I'm talking also about the the automobile segment also, I'm also talking about the AI, I'm also talking about the technology. So you don't need to invest in just one segment or one trend. You need to invest in your multiple trends so that you can diversify your portfolio. And on the beat the street, we always tell people that you don't need to put money in just one stock or one sector or one segment. You need to invest, and you need to staggeredly invest. And staggered investing, what is staggered investing is you need to focus on investment or you need to focus on the investment in a bits and parts. Like if you want, like how I work is like if I want to invest 100 rupees in particular XYZ stock or Reliance, like for an example, so I start putting 10% when I start reading about this company, or if I like, when I start reading, I just put 2 to 5% of my 2 to 5%. If I want to invest 100 rupees, I will put 2 to 5 rupees. When I found that the company is looking good, I start putting 10%. Then I start putting 20% when I found that their financial is good, their management is good, everything is good. Then I put across, like I take like 6 months to invest my 100 rupees in the particular stock to ride on the particular trend for a longer term. So that's how you need to build a portfolio. And it is not necessary कि आपको 6 महीने में ही करना है. You can also take 1 year, 2 year, 5 year. And like if we talk about like Titan, where Rakesh Jhunjhunwala invested, so they invested in when the company was at 10 rupees, and they also invested when the company was at 100. They also invested when the company was at 400, 1200, and they are currently also they can invest in a company like. ऐसा जरूरी नहीं है कि आपको तो वन थिंग यू नीड टू पुट इन योर माइंड इज यू कभी भी आपको ऐसा नहीं है कि आपको प्राइस पकड़ना ही है. इट इज नॉट नेसेसरी दैट यू कैन ऑलवेज कैन बाय द डिप in the market or dip in the particular stock. So you need to put, or you need to average out every time, so that you don't need you are not facing issues रिलेटेड टू यार आपने एक पर्टिकुलर स्टॉक में एक टाइम में बहुत ज्यादा पैसा लगा दिया एंड वहां से वो गिर गया, तो यू आर नॉट एबल टू फिगर इट आउट कि यार फिर उसको आपको लॉस में बेचना पड़ रहा है. Now, three things when you are investing in a megatrend investing, you need to put into the process. One is the monetization ability. So, whenever you are finding any company, so this is the process how you can find the sector in the company. When you find any company or when you are finding any segment or sector, so what three things which you need to assess. One is the monetization ability. So, whenever you are thinking about any company, so you always think about like how management or whether a management can profit from these trends or not. Like if we see that a generational change is happening, the increasing urbanization or increasing consumption in the Indian economy because of the rise in the per capita income. So आप मानते हो कि यार पेप्सी और कोका कोला जैसी कंपनीज की राइज बढ़ेगी, बट वहां पर आपको डायरेक्ट इन्वेस्टमेंट करने को नहीं मिलेगा. तो हाउ यू कैन राइड ऑन दीज पर्टिकुलर ट्रेंड्स इज Varun Beverages. Varun Beverages is helping Pepsi in distribution as well as in creating bottling ecosystem as well as creating a distribution platform. So you need to identify whether the Varun Beverages management is able to ride on this trend as well as they can generate profit from this trend or not. Because a lot of companies which use the trend, but वो क्या होता है कि revenue generate करते हैं but profit shareholder में नहीं बांट पाते. तो you need to identify those companies where the management is good, where the management is think about long term, think about wealth creation, think about giving to the customer as well as the stakeholders of the company. So first one thing is that. Another thing is that you need to focus on the customer, whether the companies or whether the customers in which companies you are investing, whether the customer is ready to pay for their product and services along with margin also. So whenever there is a trend change, like I am talking about AI. सो वेदर जो कंपनीज ये बना रही है, जो कंपनीज इन एआई सॉफ्टवेयर पे काम कर रही है, क्या उनके कस्टमर उनको वैसे प्रोडक्ट्स खरीदेंगे और अच्छे मार्जिन के साथ खरीदेंगे या नहीं खरीदेंगे. यू नीड टू थिंक अबाउट इट. अगर वो नहीं खरीद रहे हैं या ऐसी कमेंट्री आ रही है मैनेजमेंट की कि यार वी आर फेसिंग इश्यूज, तो यू नीड टू फिगर इट आउट कि यार the management is not capable enough to cash in the opportunity. Another thing is that the growing user base alone is not enough. तो आपका केवल यूजर बेस बढ़ रहा है उससे if we are talking about the startups, तो क्या प्रॉब्लम आती है कि everybody is talking about कि हमारा यूजर बेस इतना है, everybody wants to focus on the revenue and the top line, but nobody is talking about the profits. And now when you are coming into the public market, you have already seen that what happened with the Paytm as well as Zomato. Now when they are talking about the profits, now people is giving them enough value एटलीस्ट कि जो 2100 और 2100 रुपए का जो स्टॉक था वो अपने 400 रुपए 500 रुपए 600 रुपए में भी देखा है. द पॉइंट आई वांट टू मेक इज द प्रॉफिट मैटर्स. Whenever you are the listed player, whenever everything is in the public domain, profit matters because ultimately your valuation, everything is decided on the profits. You can only share the profit, you can't share the revenue participation to the stakeholders. So the point is whether the management is capable enough to monetization ability उनके पास है या नहीं है. Another thing is the financial due diligence. The filter two is the financial due diligence. So you need to I think you all are chartered accountants and you understand the cash flow, the balance sheet as well as the profit and loss statement. So three things you need to better analyze, and I think the person Navjot already spoken about the screener.in part, and I also like the part, and it's made by a chartered accountant only. So it's the person is the Ayush Mittal, and the three things which is very important is you need to identify whether the company is able to whether the company is profitable. The another thing is whether they are using the capex to grew their balance sheet, whether and how they are using their cash flows to generate more cash flows, like how they are using their operating cash flow to invest in the better technology, invest in the better trends across their industry, better trends in the company segment. So when these things are happening, so you need to put in the perspective that these are the trends. These are the trends which the management is ability to rise, whether they are able to fundraise, whether their revenue growth or whether they are able to beneficiary from all these trends. So all these things you need to put in the perspective. So I will give you an example. I will take you through the example. also. So last mile filter is the valuation assessment. So you don't need to give you don't need to give any price for any stock to you, like you are want to invest, like you want to invest in Paytm, so you don't need कि like मुझे तो 2100 में invest करना है यार. So you always think about the valuation. So whenever you are talking about fundamentals, everything is everything is surrounded by the valuation. So everything has a value, and you need to assess that this particular valuation, this particular stock I can buy, or it depends on a person to person, because there are a lot of assumptions available, and you can also put assumptions to valuation metrics. So there are different parameters for valuation, like discounted to cash flow, relative valuation, as well as there are a lot of other valuation methodology also available. Market sentiment is not always accurate. So क्या होता है ना कि जब ट्रेंड चालू होता है तो एवरीबडी वांट्स टू राइड ऑन द ट्रेंड. तो आप क्या होता है कि आप उसमें भाव में बहते बहते, लाइक अभी अगर आपने रिसेंटली, इफ यू हैव सीन एन एग्जांपल, लाइक व्हेन हमारा प्लान चांद पे जब हमारा द पर्टिकुलर स्पेस का जो मिशन कंप्लीट हुआ, तो एवरी स्टॉक विच इज पार्ट ऑफ दैट पर्टिकुलर रोज, बट देयर इज नो फंडामेंटल बिहाइंड दिस. सो यू नीड टू पुट मनी whenever any trend is changing. You don't need to give valuation because because the market sentiment, because of the market sentiment, because it will again come back. बिकॉज मार्केट में सेंटिमेंटल चेंजेस होते हैं, वो 1 या 2 दिन या 5 दिन 10 दिन 1 महीने के होंगे, वो अगेन कम बैक टू द दिस इज कॉल्ड द मीन रिवर्जन. तो मीन रिवर्जन थ्योरी के हिसाब से क्या होता है कि अगर मार्केट में कोई फालतू के ट्रेंड के कारण और फुलिश और एक बुल ट्रेंड चल रहा है तो सारी कंपनीज भाग रही है, बट एट द एंड अगर आपके पास प्रॉफिट नहीं है, आपके पास वैल्यूएशन आपको नहीं मिलेगा, उस कंपनी को वापस नीचे आना ही पड़ेगा. अगर हम बात करते हैं कि अनलिस्टेड मार्केट में पेटीएम वाज अवेलेबल एट 5000 आल्सो, पेटीएम वाज अवेलेबल एट 10000 आल्सो. नाउ व्हेन इट कम्स टू पब्लिक मार्केट, the market gave the valuation of just 500 or just 600. That is how you can find that the companies, you cannot you should not be in the FOMO if you are not able to invest in particular company at a particular valuation. Yeah, you always need to figure it out कि यार at this valuation, at this price point, this particular company makes sense. So market sentiment is not always accurate, so आपको हमेशा ध्यान रखना है. And the third thing is valuation guide entry exit decision and portfolio allocation. तो why valuation is important is because it will help you in terms of whether this price is making sense for entry or whether this price is right for exit or not. क्योंकि क्या होता है ना, आपने पैसा लगा दिया, बट आप बोलते हो ना कि यार हमारे को पता नहीं कि कब लगाना है और कब निकालना है. The problem is because you don't understand the valuation part. And I will give you an example जिसमें हम we will cover everything from starting to end, and how you can and this will also help you in portfolio allocation. Like if any segment or any sector or any trend is giving you a jump of like 20 or 25%, and another trend is giving you like 5% or 10%, why you will invest in a 5 or 10% trend? You will always invest in a 20% and a mega trend where you can generate or you can create wealth for like 10 years or like 20 years. So this is just a slide which help you in terms of monetizable opportunity, financial due diligence, and understand the financial and the valuation to understand this. So this is the QR code where you can join us for our Telegram channel, which is an automated news feed. We will try to track everything from the related to stock market and provide the opportunity to it is like a Bloomberg terminal where we are putting information. Anybody wants to everybody who is a trader as well as investor, और आपको एक कोई कंपनी की कोई भी न्यूज पता लगानी है तो आप फिगर आउट करते हैं यार हमको यहाँ जाना पड़ेगा. The Telegram channel which we are giving you, we already have like 10 or 11,000 subscriber on this, and you can find any news which is related to the market there. And आपको अगर पता करना है कि मेरे को पर्टिकुलर कंपनी, लाइक इफ यू वांट टू फाइंड आउट लाइक रिलायंस, सो आपको जस्ट जाना है वहां पे सर्च के ऑप्शन में रिलायंस सर्च करना है. यू कैन फाइंड आउट एवरी रिलेटेड न्यूज लाइक फ्रॉम लास्ट 1 or 2 years, जब से हमने स्टार्ट किया. वी हैव स्टार्टेड बाय 2020. तो आपको वहां से लेके अभी तक की जितनी भी न्यूज रिलायंस से रिलेटेड आई है पर्टिकुलर timeline में, you can find out there. Where on the Twitter side we are more focused on the forensic and the corporate governance side. So you can check out our Twitter if you want to find that how we are finding the corporate governance lapses in the listed space. So there are a lot of lapses which is available on our website. Also, you can find out कि we are already worked with the Ken, the Morning Contest, Economic Times, Money Life, Sucheta Dalal. So we already worked on a lot of company. Like agar aapne recently, if you heard about the SEBI investigation on the BCG, so we wrote it on 2021 that this is the issue in the particular company, and even we had dig deeper in these particular companies so that a retail investor, because nobody in India is providing a forensic check for a retail investor कि आपको इस particular company में नहीं करना है, या what are the problems or what are the lapses of the corporate governance in particular company. So our Twitter is a gold mine for us. Even our Twitter is followed by one of the respected Mr. Nilesh Shah, who is the ex-chairman of AMFI, which is the Association of Mutual Fund of India, as well as who is the leading Kotak AMC. You can find out our YouTube for deep dives or fundamental analysis. For WhatsApp community, you can find our key news as well as updates. Like nobody has the time to find out, what are the key trends which is going on, what are the key news. So we are providing like 10 news a day, 5 in the morning, 5 in the evening. So you can find out a WhatsApp community there where you can find a gist कि यार particular news में हो क्या रहा है. You don't need to go and read the articles. We will provide you a 3-pointer summary for every article. अगर आपको पढ़ना है तो you can go and dig deep. And after that, Instagram, where we are putting our content for investing as well as fun. Now I'm giving you an example कि how you can write the. So this is our particular YouTube website where you can find out us. Now I will give you an example how you can find out the companies. So just give me a time. So screener.in, which is the website which is available to you, and APL Apollo. So what happened with APL Apollo? So I want to just give you a better example, like what happened. So this is a very good website where you can use the fundamentals. So like APL Apollo में क्या हुआ? If you see like 5-year chart, so this is available at 150 or 100 and 200 ke lamsa, and it is available from 2018 to 2020. So there is nothing in the chart particular. आप अगर देखेंगे तो कुछ भी नहीं हो रहा था वहां पे. बट वहीं से अगर आप देखेंगे from 2020 के बाद जो चीजें चेंज हुई है, so why this happened? तो अगर हम आप इसको देखेंगे तो आपको मैं सबसे पहले दिखाता हूँ इसका मंथली और इसका ईयरली चार्ट, जो कंसोलिडेटेड आपको यहाँ पे सारे कंसोलिडेटेड पीएनएल के नंबर मिल जाएंगे. सो देयर सेल्स रोज फ्रॉम लाइक 1392 crore to 13,000 crore, which is 10 times. So their sales grew by 23% sales CAGR in the last 10 years, where we are seeing like from the last 5 years, their sales grow by 25%, and they are able to provide more profit to the company, more profit to the shareholders, like 32%. Like their sales grew by 25% because of the, because of the economy, because of the, economy of scale, because of the, the management and the stakeholder जो उनको देना चाहिए वो देने के लिए their profit rose from like 32% CAGR, where the stock price rose from 61%. So any company which is able to distribute, which is able to give in the steel space, so they are into this. APL Apollo Tubes is the a steel company which is providing the tube, steel tube जो होते हैं, जो हमारे घर में रेलिंग में लगते हैं, जो हमारे इंफ्रास्ट्रक्चर में यूज किए जाते हैं. सो दिस इज गिविंग अ 24% ROE, which is not, अगर आप इसके पीयर्स देखेंगे, which is JSW Steel, तो उनका ROC आप देखेंगे which is single digit, where this company is available at 26.9% ROCE, which is a very good indicator if you are talking about, if you are talking in terms of a steel company. This is not possible for a steel company to generate this kind of return over the equity, and they are able to sustain it over the long period of time. Like if you see that their operating margin is sustainable over the long period of time, and their net profit rose like 32% from last 5 years, and last 3 years they are able to generate 39% profit growth over the years. So market is giving you like they are available at a PE of 67.1, where these companies, all these peers are available at a very, very, like Jindal Stainless Steel, we are talking about at 18.15, because of the debt to equity problem. They are not able to generate so much EBITDA. They are not able to generate the profitability at that level, which they can use it to again, put into the company. So they are not able to generate the retained earning to put into the company again. where if we see like 49 crore se their profit increased to like 642 crore, which is a very very hefty amount. Now the balance sheet, you can see that the borrowings are very less, where their reserves and their you can see that their shareholder fund is like 3000 crores. So their debt to equity is very sustainable. They are able to they are able to service their debt easily. Their operating, agar hum dekhenge, their operating activity is phenomenal. If we see like they are operating at a like, so we always give an example. If your EBITDA should be or your 3-year or average EBITDA should be equal to your operating profit, operating activity or operating cash flow. So अगर वो आपका आजू बाजू चल रहा है from 80 to 120%, then the company is operating, your profitability is coming into the cash. Where if we talk about their investing activity, so they are putting a hefty amount in their investment, like they are always increasing capacity and using their, and are always operating at a higher efficiency or higher capacity utilization. So these are some things which are giving into a picture that yeah, this type of company you need to invest in. Here you find that their shareholding pattern, that how much promoter is holding, how much FIA or how much DA is holding. So their FIA holding, so foreign investor holding increased from 17% to 25%, which is a very good percentage to where the FIA is holding, where DA is holding 11% to 12%, so which is a sustainable, where the public investing is also at a similar level. So the point I want to make is that the FIA is like these kind of stories, these kind of stocks where the management is able to service the debt, management is able to give the returns, and their ROE and ROC is very superior. Similar example is happening in the Sham Metallics. So Sham Metallics was जिसका recently IPO आएगा, and I know that many of you have invested in also this. So now if you see that there is a company which is available at 295, 300 के lump sum आपको available थी. Now suddenly the jump came and this rose to like 480 and 500 rupees का stock हो चुका है. What happened in this? So if you see, this company is also at a very good, so their operating margin is superb, like 8 to 12% is sustainable. ये तो 2020 or 2021 तो देखना ही चाहिए, which is a very boom period for the overall steel companies, but their 12 to 10 to 12 15% is manageable for them. And their अगर हम उनका भी देखेंगे तो their ROE number is last year is 13%, which is last 3 year का देखेंगे 24%, and their profit growth in last 3 years is also 36%, and sales growth increased from 42%. Now the company is changing the trajectory from B2B to completely to B2C segment. Now they want to enter into the B2C segment. APL Apollo is the company which started this everything in the India, that they want to enter into the B2C segment. And अगर आपने देखा होगा तो बहुत सारी न्यूज न्यूज जो चैनल्स होते हैं उनमें एपीएल अपोलो के आपको ऐड दिखते हैं बहुत सारे. तो दे वांट टू बिकम अ B2C कंपनी. नाउ श्याम मेटल इज आल्सो एंटरिंग इनटू, एंड दे हायर्ड सलमान खान फॉर देयर एज अ ब्रांड एम्बेसडर. सो नाउ दे वांट टू एंटर. सो जब ये सब अवेलेबल होता है ना, तो द मार्केट की वैल्यूएशन टू ए हायर मल्टीपल, लाइक अगर आप देखेंगे एपीएल अपोलो को 60 का मल्टीपल मिल रहा है, वेयर दिस कंपनीज अगेन अवेलेबल एट 18. इफ यू कैन राइट द स्टोरी ऑफ द B2C सेगमेंट, तो which is easily available, so you can find it out via this. अगर आप इसका PPT खोलेंगे, which is available here, so you can easily find out that they want to invest and they want to ride on the B2C trend which is happening in India. कि they want to become a B2C company which is right by brand rather than they want to B2B company जहाँ पे आपका competition ज्यादा है, जहाँ पर आपके पास प्राइसिंग पावर नहीं है, बिकॉज टाटा स्टील एंड द मार्केट इज ऑपरेटेड बाय ए स्टील कंपनीज ग्लोबली और वर्ल्ड वाइड. तो चाइना वहां पे बहुत डोमिनेट करता है मार्केट में, तो वहां पर आपका प्राइसिंग आपके पास नहीं होता है. बट एनी द होल B2C सेगमेंट कैसे वर्क करता है, विच इज होल B2C सेगमेंट वर्क विद आपका, दिस शुड नॉट बी अ पुश प्रोडक्ट, दिस शुड ऑलवेज बी अ पुल प्रोडक्ट. तो आपका जो यूजर बेस है, आपका जो बिल्डर है, आपका जो एनीबडी हु इज यूजिंग ऑल दिस, जो भी घर में यूज करने वाला है, दे समवन हु कम टू द शॉपकीपर के पास वो आएंगे एंड दे विल गाइड कि हमको श्याम मेटालिक का ही पर्टिकुलर पाइप चाहिए. तो देन दिस एवरीथिंग विल स्टार्ट कमिंग इनटू द पिक्चर कि यार दे वांट टू फोकस. एंड द प्रपोज्ड एक्सपेंशन अगर आप देखेंगे तो दिस इज एवरीथिंग, दे वांट टू एंटर इनटू द more B2C part. जो उनका अभी currently they are into B2B part. So the point I want to make here is कि any company where the structurally companies and structurally trending changing, then if you invest in all these company or you want to ride on these particular trends, so you can generate a better return rather than investing in any company, or rather than investing in a stock tips, based on the stock tips or based on the anybody who is saying to you anything. If you are able to find out these companies, that will give you a better return and give you a better idea about investing in a mega trend which is happening in India, which is in terms of infrastructure as well as in terms of valuation. So this is from my side. If you have any question related to this, or if you want to scan this particular um, screener, so this is for you. Vinita, over to you.
Then we have some questions for you. How BNPL will make economy strong? BNPL will promote spending with borrowing, financial resources not available, economic development sectors of manufacturing, infrastructure, agriculture, education, and skill development.
So BNPL is just an example. So क्या होता है ना, when you go into the market and if you want to buy something but you don't have money, so credit card or credit thing is something which is not available to every public in the India. So things will change when everybody has a power, or whenever they want a credit and they can easily get the credit. So the trend is changing. So the whole financial sector is focusing on the credit part of the India. So BNPL is just a trend, like UPI is just a trend. So whenever any company is putting so a lot of, so this is not just one industry or one sector which is which got impacted. A lot of sector, like if you are taking loan for buying a mobile phone, then the industry and then the manufacturing of mobile phone is also increasing. So this is the circle of industries which will be impacted by like example of BNPL.
So the next question is how more consumerism will help economic development. Borrowing for spending will be disastrous for borrowers with debt trap, slow economy.
So I want to put it in this way that if you see that the growth of Bajaj Finance, they are still at a lowest GNPA and NNPA ratio, which is the asset quality of any NBFC. And why this happened? Because they're using the technology. And if you see that the what changed in last 10 years, that every bank want to become a fintech, because fintech की growth इतनी आई है कि over the periods everybody wants to underwrite it on a technology trend, because जो physically underwriting हो रही थी वहां पर there are a lot of issues, there are a lot of red tapeism was there. But क्या होता है ना कि increasing consumerism के बाद क्या होता है ना कि जब पर कैपिटा इनकम बढ़ती है तो नॉट ओनली वन सेक्टर विल बी इम्पैक्टेड, इट विल इम्पैक्ट अ लॉट ऑफ सेक्टर और लॉट ऑफ सेगमेंट अक्रॉस द इंडस्ट्री, अक्रॉस द लाइक इंफ्रास्ट्रक्चर. इफ इंडिया और गवर्नमेंट इज इन्वेस्टिंग इन infrastructure, this is not only impact the infrastructure, this will impact the logistics sector, this will impact the manufacturing sector, this will impact the financial sector, because everything comes with a circle. You cannot say कि यार borrowing के कारण कुछ हो नहीं रहा है. अगर क्रेडिट ग्रोथ नहीं होगी, इफ यू सी दैट द लास्ट 3 years द क्रेडिट ग्रोथ इज अ डबल डिजिट. सो जो कि पिछले 5-10 साल 7 साल से नहीं हो रहा था, which is not possible, because India is on a structural bull run, and when these things happen, it will give you a mega trend into a lot of sector. It is not just one sector which will be impacted, but a lot of sector, a lot of segment will be in this whole ecosystem.
So the next question is, can you please give any few screeners to scan future multi-baggers based on fundamental analysis?
So I think we have shared a lot of screener on our YouTube channel, so you can check out our YouTube. I don't want to go into one particular screener or particular script as of now.
The members are also asking about the notes of the webinar.
Notes of the webinar.
Yes.
I can share the PDF with you. So if you can share with them, then it will be open.
There are no more questions. The members are appreciating your efforts. Thank you for this wonderful session, sir.
Thank you so much, Vinita, as well as thank you so much, Nanda sir, as well as the whole team of this initiative for helping investors and helping retail investors as of now to to be more strengthened in terms of understanding the market as well as in terms of the understanding the overall economic or these kind of scenarios which help them in being better investor.
Thank you so much, sir, for your time. Now, I would like to conclude this session. Thank you so much, Charanjot Singh Nanda sir, for organizing this webinar, the whole technical team and the participants for your active participation. Thank you, everyone.